Volume is the most important trading indicator. Volume increases by 1 for every single share of a stock that moves from a seller to a buyer. And due to the laws of supply and demand, it's actually the only reason why the price of stocks changes. So whether you like to use moving averages, MACD, RSI, etc., none of it matters if you don't understand volume. So in this video, we are going to build an entire trading system solely around volume. We will build this indicator step by step. We will build a trade strategy with entrances and exits based off of volume conditions, and we will also build a scanner so that you can find stocks meeting those entrance criteria. So just turn on your thinking brain for this video, and by the end of it, I promise you will be a new trader. I'm inside of the ThinkorSwim active trading software provided by the Charles Schwab brokerage. That's what we do on this channel. We build custom codes within this platform. However, if you're not using ThinkorSwim, you won't be able to create the same exact visuals that I create today, but all the ideas will still be the same, so don't worry. Anyway, within ThinkorSwim, we're going to come into the Studies tab, Edit Studies, and then under the Studies sub-tab here, if I hit Create, this is how we can begin to create our own custom indicators. Now, when you create a new study, you get this sort of default line of code in which you already have a declared variable using the keyword plot and simply initialized with the value of close. Now, we of course want to be plotting something on our charts as well, being up arrows at specific volume indications. So we're simply going to borrow this data variable and change the initialized value. Now, here I'm going to let the machine know where I would like the arrows to be plotted. And I would like my arrows to be plotted at the low of a bar if specific volume conditions are met. For this indicator, we want to see the arrows pointing up if the current volume is trading at least 2 times more than the average volume over the last 50 bars. So we're looking at volume spikes here, unusual volume, however you would like to call it. To do this, we need to use some conditional formatting. We need to use an if statement. If, then do this, else do this. So if the volume is greater than the average volume over the last 50 bars, then we want to plot at the low, else we want nothing to happen. To make nothing happen, you need to reference the double data type, because in this data type, there is a value called NaN, which stands for not a number. Essentially, just tell the machine, hey, if this isn't true, then don't do anything. Then don't plot anything. Oh, sorry, I almost moved on and forgot. We want to see when the volume is more than the average volume multiplied by 2, right? It must be double the average volume over the last 50 bars. So to do that, I'm going to add a multiple times 2 to our average volume. So now this will only return true if the volume is greater than the average volume of the last 50 bars multiplied by 2. Now, this is a good, well, and necessary line of code that is throwing no errors. However, it's not actually performing any actions right now. All we've done, we've simply declared a variable with the keyword plot, telling our machine where we would like something to be plotted on the chart. Now, we have to tell the machine what we would like plotted. In this case, we want to see arrows pointing upwards. So to do this, we can use a look and feel function called setPaintingStrategy. However, first, that function must know what it is in reference to. It must know I'm going to set this painting strategy based off of what? In this instance, it's going to be based off of our data variable, because if the data variable is true, if the volume is greater than the average volume of the last 50 multiplied by 2, then we want arrows plotting up, right? So much like we did with the referencing the double data type to call our not a number value, we will once again utilize dot notation and type in data dot set painting strategy as the function. This, once again, lets the machine know that, hey, I should set this painting strategy if the data value in this instance returns true. So this is a function. We must open our parentheses here, and the parameter accepted by the set painting strategy function is a painting strategy. We want to see arrows pointing up. These values are also stored within a data type called painting strategy. So painting strategy dot underscore arrow up, close our parentheses, end our line of code with a semicolon. And as I hit apply now, we should be seeing arrows plotted where we have volume spikes, where we have volume greater than the average volume over the last 50 multiplied by 2. And if we actually turn that on, I think it's called volume. Yep, volume AVG. This is defaulted to the last 50 bars. So this is your average volume over the last 50 bars. We are seeing our arrows plotted where current volume is at least 2x that average volume value. Now, of course, there is buying volume and there is selling volume. There is volume increases that make the bars jump up from yesterday's close, providing you with a green day. And there are volume increases when the selling pressure on the bid is heavier, which causes, of course, red candles. We, in this instance, want to be looking for bullish volume moves. So we're going to hop back into our code here, clicking on this little cog, and on our if statement, on our condition in which we want these arrows to be plotted, we are going to add the keyword and the close of today is greater than the close from yesterday. This and operator function means that now both statements on either side of the keyword must be true in order for this, in our instance, in order for the arrows to be plotted at the low. Now, if I go ahead and hit apply, we should notice that on red days, on days where today's close is less than yesterday's close, we are now not seeing our arrows. So we're only seeing the arrows on days in which the volume bar itself is green. So we're good on step 1 of this video. We have built our bullish volume spike indicator. Now, let's begin building the trade strategy utilizing this idea of volume for our entrance, and we'll talk about the exit. So, hopping back into studies and edit studies, now, rather than just hitting create right away, I'm going to click on this strategies subtab and hit create. Make sure you do that because that's how you create a new strategy versus a new study. And before we hop into the strategy creation, I just want to let you know that if you're interested in these custom ThinkorSwim studies, strategies, scanners, etc., I have published over 60 of my own custom codes that I utilize over on my website, daytradingstrategies.net. There's a link in the description of this video. When you create a strategy in ThinkorSwim, you also get a default line of code, this time being the add order action function. This function is going to actually plot our buy and sell signals, which we define onto our chart. However, we first need to define these buy and sell signals, right? So I'm going to declare a variable named buy. This time, instead of using the keyword plot, because I don't want this to show up on the chart, I'm simply defining the condition that I will plug into the function to make it show up on the chart later. Instead of using the keyword plot, I'm going to use the keyword def or define. I'm going to name my variable buy, and we're going to initialize this with the same exact line of code that we built this study for, right? I want my buy to also be when these arrows are plotting, when the current volume is greater than the average volume over the last 50 bars multiplied by 2. So we already know how to do that. Volume greater than average volume over the last 50 bars multiplied by 2, end our line of code with a semicolon. However, for this buy condition, we are going to make one change that is different from the study itself. Because right now, this is set to buy whenever the volume is greater than the average volume over 2. However, I only want it to buy when that happens the first time, right? For this instance, you get 2 arrows up because this bar is spiked volume and the next bar is spiked volume. Just like here, you get 3 in a row because volume spike, volume spike, volume spike, green day, green day, green day, right? I only want to be buying the close of this candle. I don't also want to buy this candle. I only want to be buying the close of this candle. I don't also want to be buying this candle and this candle, turning the kind of entrance into a chase, right? So rather than just that the volume is greater than the average volume over the last 50 multiplied by 2, we are going to change that operator to the words crosses above. This will now only be true if the volume on the previous bar wasn't above the average volume of the last 50 multiplied by 2, then the volume on the current bar is that. So it won't be true on this candle and this candle because it didn't just happen. It didn't cross above on those candles. It was already above on the previous candle. So now let's talk about our sell condition. And we're going to talk about this in the context of building trade systems, because I actually haven't pre-built this trade strategy and now showing it to you all. I wanted this video to be the process of not only building a trade strategy, but also further optimizing a trade strategy. So I don't have the perfect sell condition in mind right now that I'm going to tell you all. Instead, we're going to define an initial sell condition, and then we're going to tweak it until we get the best results on our back test, right? So first off, let's go ahead and declare a variable named sell. My initial idea for when to sell is the first volume bar that decreases after our entrance, right? So you buy a volume spike, then whenever you get a volume bar that is less than the volume bar on the previous day, just go ahead and get out of the trade. The volume is no longer spiking. The volume momentum, the demand increase is slowing down. So let's go ahead and get out of the trade. So to do that, simply volume crosses below the volume of yesterday, which you offset with the bracket, set it to 1 as we want to look back just 1 bar, close bracket, end our line of code with a semicolon. Now it's time to make use of that add order function that was provided to us with our default line of code when creating a strategy. So I'm within the ThinkorSwim Learning Center here under, of course, the add order function page, as this is going to define to us our list of input parameters. These are the parameters accepted within the parentheses of the function that you can set values to, right? Our first being type. Order type.by auto is the default value, and you can click on this link here to see other possible values. The ThinkorSwim Learning Center is a great resource that you should definitely be taking advantage of if interested in ThinkScript coding. Next being the condition. This, of course, will be the buy and sell variables we have already defined in our code. So for our condition on the buy order, we will simply need to call buy. On the sell order, we will simply need to call the variable named sell. Next is price. For whatever reason, this is defaulted to buy the open of the candle after your condition returns true. That is what the offset of -1 means. We used an offset of 1 earlier when comparing volume to previous volume. If you use negative, that is offset to the right, the bar to the right. So we're going to change that because we'd rather buy the close of the day than the open of tomorrow. Really not sure why that's the default value. I almost always change mine to buy the close of the current candle rather than the open of the next candle. Then trade size, which we'll talk about when we get to. Then just some look and feel stuff. Change the color of the tick, change the color of the arrow, change the name on the plot itself. So with those list of parameters in mind, let's hop back into our script and let's begin setting up our add order function. First off, I'm going to change my order type to buy to open rather than buy auto. If you buy auto and you sell auto, the machine will also be opening short positions. So if our sell condition is true before our buy condition, and we have our order type set up as buy auto and sell auto, it will also open short positions and then use this buy as the cover condition. Instead, we are, in this instance, only looking to enter longs. So we want to buy to open positions. And then when we build out our next add order function for the sell, we want to sell only to close positions, not sell auto. We don't want to open shorts. Next is our condition, right? This is defaulted to no, which just means it will never enter a trade. It will never show a buy signal, right? We, of course, want to set our condition to buy. The third parameter was that of price. Remember, it is defaulted to buy the open of the next candle. Instead, let's have it buy the close of the current candle in which this is true. And notice how I am going through this list of parameters in order. The top-down order that we read the parameters on the ThinkorSwim Learning Center is the order that the machine expects to read them in. And as long as you are listing out your parameters in that order, you don't have to type the name of the parameter. Let's say, for instance, I wanted to do name next for whatever reason. Remember, name was the last parameter, when in fact, trade size is the next one the machine is expecting. So if I want the name of my parameter, if I want the name of my add order function to read buy, I can't simply type in buy here. As you see, that throws an error because the machine is expecting a different data type here for trade size. Of course, the letters BUY is not acceptable as a trade size, so you get an error thrown. If I was listing this parameter out of order, I would have to let the machine know that by typing the name of the parameter equals then the value. But once again, since we're not doing that, we can simply just list the parameters without explicitly defining the names of them. So the next input parameter is of trade size. And I want to pause here and talk about how trade size is defined by default within ThinkorSwim, and then how we can make use of a brand new variable declaration type to customize our entrance position sizes. So let's go ahead and apply this code to the chart and back out of it. Right now, you will notice that the strategy is entering when you get the first instance of the volume being greater than the average volume over the last 50 bars. Nothing else is happening because we haven't set any sell conditions, right? It is simply entering when that is true. You see this 50 underneath of the strategy name. That is the number of shares that this trade strategy is simulating its entrance of. If I come into my studies, edit studies, and I click into this global strategy settings, this default trade size is set here under this setting. I could change it to 100. If I OK and apply, you will now notice that the strategy is simulating entering 100 shares of this stock when you get that volume condition equaling true. Now, let's hop back into our custom strategy script and let's give ourselves a couple of lines at the top. What we're going to do here is we're going to declare a new variable called position size, and we can set this variable equal to the number of dollars we want to enter every single position. We will use that in the trade size parameter of the add order function to ensure that we aren't just entering 100 shares every trade. It will enter however many shares it can afford with whatever value you initialize this variable with. Now, we are going to declare this variable with a new keyword. This keyword is going to be input. This is the third way that you can declare variables within ThinkorSwim. Remember, we've used plot to show things on the chart. We've used define to simply store the variables locally within the code to be called later, which we did call this by variable into the add order function, right? Input variable is going to make this appear on your settings of your strategy so that it can easily be changed. I'll show you that in just a second. Let's go ahead and name this variable position size, and let's initialize it at first with 10,000. I want to enter $10,000 worth of stock every time I enter this trade. Now, hopping back into our add order function, we're going to type comma to move on to the next parameter. Once again, being trade size. I'm going to set my trade size equal to our position size variable, which of course right now is 10,000 divided by close. So however many shares it can buy, 10,000 divided by the current closing price of the stock. Now, as I hit apply and come back out of this, you will see when this ticker is trading, or this day closes at $10.10, it is buying 990 shares. As that is the closest it can evenly be divided into the current closing of the price, 10,000 divided by the current closing price, should I say. Now, come back into my edit studies. I'm going to click on the settings cog of our new strategy here. If I click on the settings cog, this is what I meant when I said that input declaration keyword made this value adjustable from the settings of your strategy. Let's say instead, I only want to take $5,000 positions. Okay, and apply. You will now notice this changes from 990 to 495 shares entered once again when the price of this value closed at $10.10. So just to round out this buy add order function with our look and feel parameters, I want the arrow color to be green and the tick color to be green. And I do want the name to read buy rather than the name of the strategy, which we haven't even set yet. But if I go ahead and hit apply and just come out of this, you will now see it's green. It says buy. Yay, yippee. That's all well and good. Now, let's hop back into the strategy code and let's build out the add order function for our sell condition. Order type, remember, we are going to use sell to close. We are going to set our condition to our sell variable. So if this value is true, this function will trigger. We'll sell the close. We'll sell the position size divided by close. I'd like this to be colored red and to read out sell. Close our parentheses. Whoops, I forgot my last little quotation there. Close our parentheses, end our line of code with a semicolon. Now, as I hit apply, we should notice both buys and sells being plotted on the chart. We are buying when we get the volume greater than the average volume of the last 50 bars multiplied by 2, which is signified by this blue arrow. Now, ThinkorSwim strategies have a little weird tick to them in that they don't actually execute until the following candle. So yes, that condition is true on this candle, and you don't see the buy pop up until the open of the next candle. So if you were looking at this in real time, you wouldn't actually see this pop up until the open of the next day. However, you notice that, here's a good example. Even though it doesn't show until this day, it's still buying at the value of the close from yesterday. So it's still properly giving you your correct backtest results. It's just showing on the next day. Just a feature of ThinkorSwim strategy. So anyway, what I'm going to do now, back into my studies, edit studies, is I'm going to turn on a study called floating P&L. If I turn this on, it will show me the profit or loss of this strategy. Now, I also have my own backtest data that I have coded and created. This is a custom study I have made. It is available over on my website, daytradingstrategies.net. Wink, wink. I would wink if I could. Do you guys know I couldn't wink? Fun fact about your content creator. But this shows you all the statistics of this currently running backtest strategy. Total trades, total P&L, win percentage, average win, average loss, and max drawdown. Right now, at least on this ticker, it doesn't look to be very good, does it? If we go look at some, more maybe tickers you're more likely to be trading rather than that random EOSE like SPY, it is green, but I mean, it's only up $1,600. If we look at something like NVIDIA, it is green, up $7,600. Something like Tesla, it's down on. Something like Block, it is up $3,000 on. So, I mean, maybe it's not the worst strategy, but I definitely wouldn't call this consistently profitable, one I would like to use yet. So let's come back into our edit studies. And now that we have this backtest data information turned on, we can begin to now use the power of codified strategies. So rather than having to go and gather all this data manually for all of the tickers I just looked through, I mean, there's 70 trades on this. We looked at NVIDIA, there was 193 trades. SPY, there's 200 trades. It would take you hours and hours and hours to gather all that data manually and then to perform these calculations. With code, it does it all automatically. And guess what? We found that our current sell condition doesn't exactly work very well. So I can come in and I can change this sell condition. Let's say instead of the volume crosses below just the volume from yesterday, it crosses below the lowest volume out of the last 10 bars. We'll offset that value by 1 so that it's not comparing against today's volume, which can never be lower than itself. Now, if I hit apply, guess what? We can run the test again. Immediately, the numbers get a little bit better on SPY. They look a little bit better on NVIDIA. They look a little bit, well, I don't even know yet. Oh, wow. They look way better on Tesla. Immediately now, the strategy looks way better. And look at how easy it was to just change a quick variable and to run the test again. And all of that data is pulled for you automatically. If I wanted to run that first test, look at those results. Okay, it's not that great. Optimize it, change our exit criteria, then go gather all the data again, calculate those results, see it looks a little bit better. That's an all-day affair. I mean, we're talking an 8-hour workday probably to gather all that information. I just did it in, a minute and a half here, and that was even with me taking the time to explain it using this code. And that is why, in my opinion, you must be using code to build out trading strategies if you want to be a consistently profitable, systematic trader in the stock market. It's just ridiculous how much faster you can create and optimize strategies in real time when making use of this code rather than doing it all manually. All right. Coming off that sermon, let's talk about what we actually did there, because that was just kind of an idea I conjured up in my head during my speech, and it actually looks to be working pretty good. So now our sell condition is when the current bar volume crosses below the lowest volume value out of the last 10 bars. We, of course, offset this by 1, meaning we want to compare this against that value from the previous bar, as if you don't do that, you would never sell, because the current bar's volume can never be lower than itself. So you would simply enter and then never sell if you didn't have that offset. So let's come back in and let's reset that offset. And now I want to do something else. I want to just plot a new variable, and I want to plot this lowest volume over the last 10 bars so that you can get an idea of what this looks like. Actually, what am I doing? You know what? That won't work, because volume is a much different value than price. And if you plot it within the strategy, it will plot it on the price bar. Let's actually come in and create a new study here, and let's create this plot inside of this study so that we can then overlay that onto the volume and get a look at it this way. Now you can see a visual. Hey, we bought Tesla when the volume of the current bar crossed above the average volume of the last 50 multiplied by 2, signified by this study that we built earlier and the cyan colored arrow here. Now, we don't sell until a volume bar is lower than this cyan line on the volume chart, which represents the lowest point out of the last 10 bars. So here, we didn't sell until this candle, as this was the first candle that closed lower than the lowest volume point out of the 10 previous candles. I actually like the way this looks a lot. Now, let's make this even a little bit more customizable. Rather than hard coding in our value here of 10, let's go ahead and create another input variable. Let's call it input volume low, and let's set this equal to 10 for right now. Now, once again, rather than hard coding that 10, I'm going to call volume low, this variable, into our lowest volume action function here. So now once hitting apply, of course, nothing will change right now as we haven't changed anything. But if I come into the settings cog on this strategy, I now have easily available this value, which I can change. Hey, let's look at our backtest results. If we close our trades when the volume closes below the lowest volume level out of the last 20 bars. Instead, we can run this, take a look at the results. They look great. I mean, we can once again flip through Tesla, Nvidia, SPY, Block. You can flip through all of these. And guess what? I haven't talked about this yet, and maybe it's obvious, maybe it's not. You can also flip through any time frame. Strategies and indicators within ThinkorSwim are auto ran on whatever data you are showing. So whatever time frame and whatever ticker you're showing. Really, really nice feature of ThinkorSwim. You don't have to change your code for time frames and for different tickers. So we can look at that. Then we can change it to, well, what if we look at 5 instead? Or what if we look at 35 instead? And that's just another addition to how we can make gathering data and optimizing strategies easier and faster, which is going to make you a better trader. I considered not doing this next part, skipping over it just to make the video a little bit shorter, but if you're 31 minutes into the video, you're locked in and you want the best trade system possible, right? So let's go ahead and do this next part. Let's get rid of the study itself. We don't have to have a study created to plot those arrows, because what I'm going to do is I'm going to also, rather than hard coding our entrance, create another input for volume high, set that equal to 50, and then set that variable as our reason for entrance, right? We're going to buy when the volume is higher than whatever this variable is initialized at, or whatever you change it to from the cog. However, that wouldn't align with the study that is actually plotting the arrows as well, because if you wanted to see those arrows, you would have to go change that study too, which would be a little bit annoying. So instead, let's just build out that plot here within our strategy so that it's also showing those arrows within the strategy itself. We want to plot the low if the volume is greater than the average volume, now using that volume high variable multiplied by 2. Then we want to plot low, else we don't want to plot anything. Double dot, not a number. We need to call in now our, hold on. Hello. Give the variable a name, Trey. Sorry, I was in a cross of minds there when trying to talk and do that at the same time. Now we need our look and feel function of set painting strategy, arrow.set painting strategy dot arrow underscore up, close parentheses, end our line of code with a semicolon. Now those arrows will be back and plotted on our chart and will change. So now we can come back into our little cog here on our strategy that we created, and we can adjust this as well. Hey, let's buy instead if the volume crosses above the average volume times 2 out of the last 20 bars. Okay, those numbers look pretty good. What if it's out of the last 10 bars? Okay, those numbers look even better. What if it's out of the last 100 bars? Now you have full customization over both your arrow plots, your entrances, and your exit, all from the input of your strategy itself, which is making even better and faster optimization of this trading strategy. All right, are you all with me? We're through the first 2 steps out of our 3-step process of building a trading system. We've built out the study, we've built out the strategy. I know we're 34 minutes into the video, and I know the strategy is the sexy part, right? But don't go anywhere, because it doesn't matter how good your strategy is if you don't have a correct scanner built to find the stocks aligning with your strategy. And that is going to be part 3 of building our volume trading system today. We are going to build a custom scanner. Since we've already talked about the buy condition formula multiple times in this video, this part will actually be really simple. Now, I do have a couple of stock filters turned on to my scanner, which I have on almost every single one of my scanners. First off, I have the last price set to a minimum of $1. I just don't want to see penny stocks. I have a market cap set to 0.01, just meaning it's going to get rid of all the NA market cap real crap stocks that are out there. You can see from this bar, it actually eliminates a lot of stocks when you just make sure that there is an existing market cap, right? Then I want to see daily volume of at least 50,000. I don't want really low liquidity stocks returned within my scanner. You can adjust these stock filters to limit your search results across whatever types of stocks you would like to trade. Say you also don't want to trade stocks that cost more than $50, or you do want to see penny stocks, or you want to see more volume traded. Whatever you would like to see, of course, feel free to set these stock filters too. But the meat and potatoes of this filter, we're going to come in, or of this scanner, sorry, we're going to come add a new filter. We're going to add a study filter type, and we're going to click on this pencil here, and we're going to come into the ThinkScript editor. I only want to see stocks in which the current bar volume is greater than the average volume over the last 10 bars over the last 50 bars multiplied by 2. This is our initial buy condition. Now, of course, I just taught you all how you can use the input variable to adjust this number of what you want to compare the average volume against. So you would do all of that back testing first to decide what value you like there. And then, of course, you would plug that value instead into your scanner. I'm just going to keep it at our default 50 for right now. And as I run this scan, we should only see stocks in which our strategy and study are currently entering. Actually, wait a second. Me just talking through that just made me remember something. Remember, we talked about this in our strategy. We changed our strategy buy condition to only be crosses above rather than greater than, because you only want to enter on the day where the volume actually crosses above this average volume value, right? You don't want to see all the stocks in which that is just true. You only want to see stocks that is true today, as those will be the stocks you're looking to enter if you're going to trade a system like this. So sorry, that's why you talk through and work through your ideas in real time. Volume crosses above. Now we get this list of stocks, first of which being BPTH. Let me actually first make sure I have this set to 20 right now. Let's set it back to 50 and let's look at BPTH. Yep, today it is getting a huge volume spike appearing on the scanner, as it should. Next, you got Roblox. I haven't looked at this stock in a long time. Today, you are getting a huge volume spike appearing on the scanner, as it should. Actually, wait a second. Let me come back into my scan. I also forgot that we set our strategy to only buy if the close is above yesterday's close. Just looking at that Roblox made me realize that stock's going down on heavy volume. We want to be buying bullish volume stock. So we need to use our and condition, and we need the close of today to be greater than the close of yesterday. Now let's run our scanner. That should kick Roblox off the scanner. It does. Actually, you now notice all the stocks on the scanner are, of course, green on the day. That kicks Roblox off. That is exactly why you want to look at your scan results and make sure that it is aligning with your strategy and how you want it to look. And actually, we forgot to do that within our strategy too, because you still see, even though the strategy won't buy today, unless this gets back to green, you still see the plot because we forgot to add that into our plot here as well, that the close is greater than the close from yesterday. You see that arrow go away on the chart as well. So sorry about that. A little bit of real-time bug fixing in our code here, but let's look at a couple more stocks here just to once again confirm that both our plot and our scanner are working as expected. DocU getting a volume spike well above the 2x of the average over the last 50, showing its plot and appearing on our scanner as the stock is also green on the day. The next one down was SLNO. This stock is, although the candle is red, it is green on the day as it's a big gap up and getting huge volume, plot, and scanner working as expected. Guys, I'm sorry, I'm tripping. I just remembered while kind of talking through those errors we were running into with the scanner and the plot that we only wanted to see arrows that are showing on green days. We didn't plug that feature in to when we buy. We are currently, even though we're only plotting the candle when the day is green, we're still buying even if the day is red. We need to also append this and close is greater than the close of yesterday onto our buy condition as well, right? And you'll see that makes, even though the strategy on this stock is still red, makes this a little bit better. If we click through some of these other stocks we were looking at before, it's going to definitely lower our number of trades, which is actually a good thing. It's better to see a smaller number of trades in a positive back test. And I don't remember the exact numbers, but looks to be making the P&Ls and max drawdowns a little bit safer as well. Sorry about that. We're 40 minutes into this video. I'm human too. And this is exactly why, as you're building trade systems, actually, it's important to kind of, while going through all your steps, think about what's actually going on, look at your code, make sure it's working correctly. So just go back into your buy condition and make sure you append that the current bar close is greater than yesterday's close onto your reason for entrance too, so that that is also aligning with our study that we built at the very beginning. Remember, guys, if you're interested in this codified trading, which you just watched a 40-minute video, so you obviously are, you get access to all of my custom codes over on daytradingstrategies.net, all for one low price. I don't sell them code by code or anything like that. You simply sign up, you get access to everything. Right now, that price is only $25 a month. Because I'm always updating and adding new codes. It can, of course, be canceled at any time under the My Account tab. But once again, I'm always adding and updating codes. That's why it is a subscription. So, I mean, if you don't think that you're going to help make yourself an extra $25 a month from having access to these 60 different strategies, indicators, and scanners, that's up to you. I'm not pocket watching. But if you don't want to sign up, can you please at least hit like on the video and make sure you're subscribed? Thanks, guys. And I'll catch you all in the next one.